absorbing capital every single day in the market. So if you're looking at my enterprise value, it's like tipping to 140 billion right now. The retirement accounts in the UK where you have control of the money, but you can only invest the money in a compliant equity that the retirement account lets you invest in. So there's lots of that, 401ks, IRAs, retirement accounts. They've got them all over the place. They've got them in Australia. They've got them in Japan. They've got them in the UK. And we're creating these instruments, whether they're equity or they're credit, to tap into those pools of capital. And it seems inevitable that passive capital will definitely drive this movement. The one thing that's worthwhile to note about Bitcoin Treasury companies that's not true of other equities is Bitcoin Treasury companies are pure energy creatures. We're absorbing capital every single day in the market. So if you're looking at my enterprise value, it's like tipping to 140 billion right now. The enterprise value of the company is 1.2 billion. 4.5, 5 years ago. So if you were a passive investor, you might have had 1 billion of it. But of course, as we get 100x bigger, you're buying 100x more, and we're qualifying for a lot more indexes. And as we get indexed, that means that, when there are passive flows, and there are always passive flows, on the margin, there's always going to be more euros and more dollars flowing into passive capital markets funds. That's going to flow into the Bitcoin Treasury companies and the index. And when that flows, it's going to drive their premium. And when the premium expands, then they can simply issue the equity, buy the Bitcoin, expand their equity market cap, expand their weighting in the indexes, rinse and repeat. And so BTC companies are positively polarized to the capital.